Everyone knows that CFA charter holders get the most money compared to every other job out there. Just kidding. But there are several different ways that a CFA charter holder might receive compensation. In this video, we're going to dig into the CFA Institute's annual compensation study to see how commonly or just how often people are getting paid for some of these different sources, like cash bonuses or stock. Then we'll look at how much of their total compensation comes from each source. 98% of CFA charter holders receive some type of base salary. 85% of charter holders also receive some type of incentive pay or bonus compensation. And 25% of CFA charter holders receive long-term pay, either through deferred cash compensation or through retained earnings distributions through partnerships, either at the firm that they work at or with companies they've done deals with. And 100% of CFA charter holders who like this YouTube video are guaranteed to earn superior compensation in the future. We're talking about like physical cash bonuses, cash wrapped up in rubber bands getting thrown at the back of your head by your managers.
Look what I found in my pocket! Look! A year's salary right here!
So make sure to like the video. Now, the type of job that you hold will have some impact on the type of compensation that you receive as a CFA charter holder. For example, people working in private equity may often get stock compensation via shares in the companies in which their firm has invested in. Corporate bankers may receive cash bonuses at the end of the year based on the volume of the deals that they closed. Also in the compensation study, in addition to how much and how you make your money, is what industry do you work in, and 44% of respondents said they worked in some type of wealth management or financial advising role. 38% of respondents said that they worked in a research or analytical type role, and some others said they worked in settings like hedge funds or family offices. With wealth management and financial advising being the most common sector that CFA charter holders are working in, we'll start there. Wealth management is going to be one of the sectors where not just the majority, but probably the vast majority of your total compensation is going to come through base salary. Now, if you're in a marketing or selling role, it's likely you'll have some compensation tied to business results in that sense, but I think most CFA charter holders working in wealth management are in a bit more of a service-oriented role through like portfolio construction or investment selection. And just because of the nature of that business model, it's less likely that you're going to have incentive compensation. Further, since most wealth management firms are either small businesses or franchises of larger corporations, you're likely not getting paid in your employer's corporate stock. That means that when you're looking for a position in wealth management and you're considering your compensation structure, you're going to want to make sure you have a solid base salary, because I think that will likely be the vast majority of your income. Another potential scenario here, though, is through a minor partnership. So back to the point on many wealth management firms being small businesses, you have the opportunity to make a large impact on the firm, so you could potentially get yourself into a junior partnership type role, in which case you might receive some long-term compensation like retained earnings distributions. Next, we'll talk about what might be the next most common type of role for CFA charter holders, which is the analyst role. In my opinion, this role is going to have the most straightforward and structured compensation packages across the rest of the industry. The reason for that is many investment analysts work through larger companies, and relative to other sectors in the finance industry, I think those companies are going to be more rigid around the compensation that they'll pay people, more similarly to what you might find in engineering or healthcare, where it's like, hey, this is the tier that your seniority is at, this is what your compensation is going to be. That being said, a bigger portion of your pay in an analyst role will probably come from some type of annual bonus, usually through a cash bonus, but it could be stock in your employer's company. Depending on who you are, getting 25% or maybe as much as 50% of your compensation paid to you in an annual lump sum cash bonus could be a good or bad thing. You'll just need to make sure to plan out your own personal finances, considering how your bonuses get paid if you're working as an analyst. As an analyst, you definitely should not be getting paid any incentive compensation or kickbacks from any of the companies that you were doing research on. That would certainly be a violation of a handful of the standards of professional conduct from the CFA's ethics books. Well, not always. You can get some kickbacks. You just have to disclose them in different ways depending on the nature of the kickback. If you're watching this video, you know all that. Now on to private equity funds or hedge funds. In my opinion, these are kind of the wild, wild west. In terms of compensation in the finance field, you can certainly earn more money doing these types of jobs than probably almost anywhere else in finance or anywhere else in the entire economy, but it can be very unknown. It can be really variable. Now, I've never worked in private equity or a hedge fund. I only know a few people who do, so I'm definitely not the best person to get the information from on compensation for people working in private equity. There are much better channels out there on YouTube that can give you that insight. But in general, you're going to have in my opinion, huge base salary. You're probably going to have a also very large cash bonus, but then there's a good chance that you have some compensation either tied up in the firm's funds. If you're a hedge fund, a general partner at a hedge fund, and the firm is launching one new fund every 10 years or something like that, you might be getting awarded shares in that fund, which makes sense, right? The hedge fund wants to align its analysts and its associates' interests with the interest of its investors, its limited partners, so they want you to want the portfolio positions to perform well. If you're involved in a private equity fund or a hedge fund that happens to hold a position for 3, 5, 7, 10 years, and it either goes public or some acquisition picks it up and those shares are sold from a drastically appreciated price from where they were additionally bought, you might get a huge chunk of incentive pay based on a positive outcome from that type of a deal. Back to the overall look at the CFA Institute's compensation study, it showed that about 72% of all the respondents to the surveys, their compensation was coming from their base salary. And back to one of the earlier statistics, only 2% of CFA charter holders didn't receive any base salary and were just likely paid completely from incentive pay. So it's always going to be a factor, in many cases the biggest factor. You want to be negotiating for a solid base salary if you're working on, climbing the income ladder. 24% of all the compensation earned by CFA Charterholder respondents to the survey came from bonuses. Again, those could either be cash bonuses like around the end of December or the beginning of the next year, or stock bonuses in a portfolio company or the parent company through which you work. This is the type of compensation that can really push you into the upper echelons of the income brackets, but it's also really variable. So you need to know that if you're relying on a big chunk of your total compensation from bonus type incentive pay, there's a chance that even if you made a huge income in a certain year, it could be half or less than half of that in future years, depending on what the stock market's doing or how your company is performing. But it's likely that even if you have a really volatile compensation, if you have more than a half or 60% of your pay coming from bonus or incentive pay, you're going to be making enough money to make ends meet no matter what, and you're likely going to be making more than that. So unless you're going out and buying a ton of jewelry and Lambos, you're going to be okay even if your income is volatile and is lower in some years. And overall, only about 4% of all of the compensation earned by CFA charter holders was coming through long-term pay through things like retained earnings distributions or dividends. I was honestly a little bit surprised to see that only 4% of income was being earned this way. It could be to many firms' advantages to give their employees more long-term incentive compensation so that they're not just hyper-focused on current results. That can skew the long-term goals of a business in some instances. And one of the advantages of being a private company is that you don't need to report your quarterly financial statements. So I would have guessed this number would have been higher, but I don't know all that many people who are earning long-term pay as some employers might describe it. So maybe it'll become more popular in the future, but probably not. The last part to this video is going to be completely opinion-based, but I want to get a little bit into the gig economy or having a side hustle that's becoming really popular in the last few years. I have this opinion of CFA charter holders, and it's a negative opinion, that they are very risk-averse when it comes to pursuing other business interests that don't directly align with the analyst work that they were trained on throughout the CFA program. Now, this partly makes sense. Like, people who go through medical school for 12 years and become a doctor, it's not likely that they're going to start building custom cars and selling them out of the garage or something like that, because there's probably a negative ROI to their time versus doing surgeries at a hospital compared to that side gig. But I also have a belief that side gigs or creating other streams of income for yourself can certainly make up significant parts of your income in the future. There are plenty of people out there who make up more than half of their income through what was once their side gigs and becomes a more primary part of their life. Me doing this YouTube channel may be a little bit of a hint towards the fact that I think people can earn money doing things that are not directly related to their 9-to-5 job. Now, I don't make a lot of money doing it, but in the future it could be lucrative, we'll see. Because people spent so much time and energy towards becoming an analyst, a chartered financial analyst to be exact, I've seen a handful of people, and I think this stereotype could be applied relatively well across the entire population of CFA charter holders, but I don't think they want to do too many other things. I don't see many CFA charter holders trying to get into real estate, and I don't see too many CFA charter holders trying to start online businesses like you see many other people doing. Now, I realize another factor there is because most CFA charter holders are earning a really good income, so they probably don't feel like they need to do some other side hustle to make a little bit more money on the side, whereas people with really low incomes are like, hey, how do I get myself out of the situation? I gotta get a side gig. So that's good. And while it's not an immediate need for many CFA charter holders, I do think it can be a valuable thing to do in your life to have other streams of income. So for the purposes of this conversation and how CFA charterholders get their money, it's pretty linear in my opinion. I think actually CFA charterholders are more pigeonholed to their 9-to-5 jobs. They could be working more hours than that, but they're more pigeonholed to one stream of income relative to people across the rest of the population who I think will more often create multiple streams of income for themselves. Just my opinion on it. I don't have any data to back that up. It's just based on a handful of conversations that I've had with people. If I'm way off on that opinion, and if you've heard of many CFA charter holders starting up their own businesses or doing something else on the side, drop a comment down below and I'm happy to check that out and respond to you there. Thanks for sticking around to the end of this one. You know that the YouTube algorithm loves the long watch times because you've probably heard me say it before in the past. So if you haven't already, please like this video and subscribe to the channel. Both of those things help me out very much and I appreciate them. As always, thanks for watching.